Record. We're on.
Okay. So today's call is May 4th, Wednesday, May 4th. We're going to talk about finance today. Helgi, how are you? Feeling better? Sorry, he just sent me a message. I want to make sure he's feeling good. You good, man?
Just good. One thing, Helgi, Mike Howard is launching. He starts selling on Monday, and he is on fire.
Helgi, we have nothing to worry about. Just sell another 53 tomorrow, and we'll be fine. I'm not worried. Helgi,
this is Gary Camellia thing too. Helgi and Gary Camellia, Mike. I like this.
Listen,
game on.
Listen, is that Jeff down there?
That's Jeff.
Come on.
Game on. It's good. Game on.
Helgi, we got nothing to worry about, dude. First off, I would like to introduce Sandy to the group. Everybody say hi. This is Helgi and Jeff, or okay. Jeff failed. But Sandy's the newest member, and very excited to have her on the call today for the very first time. So today's call is education, and it's going to be about finance. It's going to be very basic. And the way that I structured this particular call, thanks for joining us, Jeff. The way that I structured this particular call is kind of on a one-on-one type of questionnaire basis with the people that are going to be on this call. Now, I have slides for you, but I'm not going to give you the slides today. We have checklists for you, but I'm not going to give you the checklists today. What I want to do is I kind of want to do a real-time where we are so that whomever is on the call or listening to the call can have an understanding of what is kind of needed at the beginning foundations of a business. Does that make sense to everybody?
Yeah.
I hope so. Cool. So let's start with Jeff, since he's so uber excited to be on the call. When we've all been, excluding Sandy because she just started, we've all been in MPA and in business for a little while, at least a year. So we've all had these conversations. So the things that we're going to talk about today, we've all had these conversations before. However, it is always really, really great to get back to basics and understand where we are to kind of give ourselves a little bit of a review. And then in that review, what we're going to do today is that we're going to layer on to another educational call like this, but with, excuse me, a little bit more formal, with slides for you guys and checklists so that you have other things to kind of reconcile what you're doing to where you want to be. So I hope all of that makes sense. So let's start with Jeff. I'm going to pick each and every one of you. Sandy, I'm also going to talk to you a little bit about it. But it's good, right? We want to be able to share because when we share, that's how we learn. Sandy, I'm just going to mute you really quickly. I'm sorry. Jeff, I'm going to unmute you since you're apparently being very difficult and not unmuting yourself. It's so funny, right? It's like a love relationship that no one on the phone understands. Jeff, first question that I'm going to ask as a foundational question is budget. Do you have a budget for yourself outside of your business? And when I talk about budget, I think of profit and loss. And I think of that you need to know what is called a burn rate of how much expenses are going out of you and income that is coming into you. So my question for you is, do you have a budget for Jeff's family?
We haven't redone it in the last year, probably.
Okay. So do you have a budget for Jeff's MPA?
No.
Okay. So when we start and we think about budgets, it starts with expenses, it ends with expenses and starts with income, right? So what we want to put on the top of our budget or P&L, there's profit and loss, If I talk in acronyms, guys, and you don't understand what I'm saying, raise your hand, unmute yourself, and say, I don't understand, and Camellia will answer you.
I'll make it up.
Okay. So we start at the beginning, the foundation, and this is how I would advise you run your life and you run your business. Okay. Because if you run your life like a business, things run much smoother and you understand where you are, what you can do and what you can't do. And there becomes a lot less stress. Now, I'm starting with you, Jeff. So as income, right? Those are streams of revenue, right? So on the top of a piece of paper, you're going to write your streams of revenue. Streams of revenue are what money is coming in. What income are you making? And Camelia, if you want to chime in at any time, please chime in, because I'm just going to be just kind of jiving with whomever I'm chatting with at the time. So if you have a coaching business, if it's if you have a one-on-one coaching business, if you have a group coaching business, if you have a whatever type of revenue stream that is coming in, right, is an income stream.
So in Jeff's case, it would be your salary, right, from the university, and your MPA coaching.
And my club coaching and my training that I do on the side. So
perfect. All separate. We want to track it all separately.
Yeah.
Exactly.
And I will call them in GAAP terms, in accounting terms, they're called line items. Okay? So each one is a line item, meaning that they have their own space on the spreadsheet. So you line item them all out, and then to the right of that, you put down, if the income changes, right, whatever it is, let's think about, I think we're in May right now, so let's talk April. You put down what came in April. There's a total number at the end of that, right? So those are income, things that are generating income to you. Then below that, you have what are called expenses. We have fixed expenses and we have variable expenses. Fixed expenses are expenses that never change. Okay? So like your mortgage, your rent, if you have a car payment, if you have Weber for your contacts, Infusionsoft, things like that don't change. Does everybody get the gist of that? Right? We all have fixed expenses that we know that we're going to have to pay every single month. Then we have variable costs, variable expenses. Electricity is a variable expense, right? Gas, things like that are variable expenses because they go up and down. Now, I don't want to confuse you, but what you can also do is you can take a year amount of those, right? So you could take last year's 2015 and say, I spent $100 on electricity for that year, and divide that number by 12, and it can be an estimated number inside each month, right? Does that make sense? So that works very well with taxes. If you have to pay car tax, right? Usually you get one bill, 1 month on car tax, right? And you owe $300, $500, depending on what kind of car you have and what state you live in. What I do personally is I divide that number by 12 so that I know that it's an actual expense going out and I have to have that money no matter what. Does that make sense? Okay, so we have our income, we have our expenses, right? And then below that, to get what is called our burn rate or whatever money is coming out, you have to take your income minus your expenses equals your total profit. So your income, guys, is called your revenue. And then your revenue minus your expenses is called your profit.
I'm going to qualify what Gary said just a little bit, because we always look at what's left over as the profit, and that is the standard way of doing things. But what we forget is that we need to pay ourselves first, right? So, because what is are you going to get into that?
Well, I was going to say that should also be part of an expense.
Yeah. So
sorry, I didn't.
We have the fixed and we have the variable expenses, but you always want to include in your expenses your owner pay, so what you're going to pay yourself, and your various savings accounts, your business savings, your tax savings, which Gary spoke about. All of those are considered an expense. You must pay yourself first. Otherwise, what's the point of having the business? Is just becoming a charity at that point.
Mm-hmm. So your profit, think of as a surplus, right? So surplus means more money than less money, right? So does everybody know what that means? Yes, Jeff knows. Yeah, okay. So in the expenses should be our Roth IRA, if you have a Roth IRA, should be your life insurance if you have life insurance, should be all of those retirement funds that you have in there. So I'm going to be personal with you, and I'm going to tell you, in my expenses, I have a vacation account where I make sure that X amount of dollars every single month goes into a specific education or the vacation account. I have a child care account where I know that everything goes for either school or babysitting or whatever. I have, if someone cleans your home, that's an expense. All of these little things that sometimes we don't think of are expenses. Groceries, those are expenses. All of those things are expenses.
Just make sure that you're differentiating your business expenses and your home expenses, right? And so what I would recommend doing is having 2 spreadsheets, one for personal and one for business. And you fund your personal expenses through your owner pay, or however that money is going to come out, into your personal expense sheet.
Absolutely right. And Camelia, correct me. So I'm trying to read your mind through here. And I think what Camelia is saying is at 100% true. That's exactly how I do it. And then you take the owner expense that's in the expense column on your professional spreadsheet, and that becomes the income on the personal spreadsheet.
Exactly.
Does that make sense?
Now, Jeff, in your case, you may use your salary, your pay from the university as your home expenses. Mm-hmm. And it's not part of your other business, right?
Right.
So that could just be what funds your personal expenses revenue. And then all the other revenue is funding your business expenses. Is that what you do? Or is that what you try to do?
That's the idea of what it should be.
Okay. All right. But to Gary's point, it's separate.
Mm-hmm.
Debt is also an expense. Specific debt. Credit card debt, right? That would be a payment, not the actual. So if you owe $100,000 on a credit card, that's debt, but that's not in the expense column. That would be on our balance sheet, which we'll go over later, right? Right now, we're just talking about our income statement or a profit and loss statement, okay? But the payment to that credit card goes on the expense column. Cool? Very simple, not hard, right? There's plenty of templates. Camelia has an amazing template that I'm sure all of you have. Sandy, if you don't have it, she'll give it to you.
One clarification, Gary, because of what you just said about debt. If the debt incorporates, well, it's past debt, not credit card payoff, right? But should we clarify the two? Because,
So it depends on what debt we're talking about.
yeah.
Right? So you continue. Tell me what your thought is.
Well, if your credit card is always paid down to zero each month,
Yes.
but you accumulate charges on it from your expenses, you will not have a credit card payoff item on your expense sheet because then you're double expending.
That is correct.
Right?
That is absolutely correct. Mm-hmm.
But if you have $10,000 in credit card debt that you're carrying over months and you're working to pay that down, then that becomes an expense item on your,
yes.
Same
with a car note. So debt, right, is you. That's exactly correct.
Just you need to make sure you're clarifying those two because you don't want to double book your expenses because of a credit card payoff.
Yeah.
Does that make sense? I need clarification. Yes. Does that
Sandy, does that make sense? So if you owe $5,000 on a credit card, right, and you pay $20 a month to that $5,000, that $20 a month is an expense. That $5,000 is debt, which is not an expense on the profit and loss. Yes? Sandy, yeah? No, if you have questions, ask.
Questions,
that's what we're here
ask
for, dude. Here, I'll unmute you. Go ahead, girl.
I don't have questions per se, but I mean, in the US, you have a totally different system than in the States. So, a lot of things that I'm hearing here are a lot different from how things work here. And
are you in Canada, hon?
No, I'm in the Netherlands.
Okay, so tell me what's different.
Well, just, taxes and things like that are totally different from what you're explaining there, how they do it in the States and stuff like that. So,
Okay, do you owe taxes? Do you get taxed?
Well, I mean, I do yearly income taxes and stuff like that because,
okay.
But, going to have to figure out, well, I mean, I do have an accountant, so, I still haven't decided where I'm going to open my business, if I'm going to do it, if it's more lucrative to do it in the States or to do it here.
Okay.
I think it's more lucrative for me I'd have more benefit from doing it here than from opening it in the States, because if, I purchase stuff here, then I can get a better price or get other perks with it than, if I open a business in New York, it's going to be like, okay, fine, pay them taxes kind of thing.
Yeah, don't open a business in New York.
Yeah, no, but then, I mean, the thing is, then I also have to end up filing U.S. taxes as well, because I'm a U.S. citizen, so.
Okay, so to deal with the taxes that you have over there, if you have to pay an income tax, right, then just think of the percentage of income tax that needs to be paid, right? So I don't know how it is in the Netherlands, but I'm sure that it is a percentage of total.
It's like 42%.
Okay, so think of you have to save 42 cents of every dollar, right?
Yeah.
And that just becomes another line item.
Okay.
Right? So none of that changes. It just becomes a line item on there, just so that you're aware and you know that money is going in a certain spot. So when the money's due, you have it.
Yeah. Yeah.
Okay. Is there anything else this stuff can be really, really overwhelming at the beginning.
Yeah.
And super confusing. But that's a story and a perspective that we have.
Yeah. Oh yeah, for sure. Yeah. I'm not concerned about that because, I mean, I do have a spreadsheet and I track all my stuff as well, like what you were saying about, regular payments and, unexpected payments and normal income and unexpected income and stuff. And I have a spreadsheet for all of that for my own personal life, you know, on a monthly basis. So, I mean, as far as that goes, I'm basically organized, but I'm, you know, looking at, you know, the explanations that you're giving here. And I'm sure, you know, that in time I'll be able to assemble it into, you know, a story that I can follow more easily. But, you know, for the moment, it's all kind of, I'm getting a lot of stuff thrown at me, you know, information wise, and, you know, it's a lot for me to transpose. So, you know.
And you have one of the best coaches in the world to explain it to you on one-on-one coaching with Camellia. She is a rock star when it comes to finances, and she will break it down for you so simple and so easy that it'll be like second nature to you.
Yeah. Okay. Yeah.
Absolutely. This is kind of just, we call it like learning by the fire hose, right? It's hard, right? So I'm just spewing
as
out.
long as you don't hit me with the hose, I'm cool.
Exactly. Do you have any other questions though regarding what is called the income statement or profit and loss sheet?
Not at the moment, no.
Okay. One thing that I do want to stress for everybody that is listening to this call or on this call is that Camellia said, pay yourself first, which is so important, right? And another very important thing outside of paying taxes and all of this stuff is actually allocating dollars to a savings account right now. We want to make sure that we build up a savings account, right? That if, Jeff, did you just make a face at me? That if you are not able to work for some reason, that you'll be okay for 6 months. Okay? And then once you start making gazillions of dollars and all of this, then you run into other things where you can invest that money and do other things with that. But right now, a focus of like a real big focal point of yours is to build up that savings account. Now, each in one of you individually has different lives, and you go over your financial situation with either Camellia and I. So if you have bad debt, meaning credit card debt and things like that, we want to make sure that you have a scheduled plan to snowball that out of your way. Okay? Things like that, we want to make sure that we pay off, because the interest rate on things like that are much higher than the interest rate in a savings account, right? And inflation is ridiculous. So I know that was a lot of stuff. I'm going to stop right there because I don't want to overwhelm anybody with anything right now. But I would love to hear from all of you telling me how things are going and if this made sense and if there's anything else that Camellia can clarify for you. I want to hear from everybody. That means everybody I want to talk. We'll start with Helgi, as he's got like the gangster things going on over there. I don't know where to. All right, shoot it up, brother. Tell me.
I can relate to Sandy about.
Wait, I can't hear you.
You can hear me?
I can't hear you. Put your gangster microphone on. Yeah.
Can you hear me now?
A little bit. Go ahead.
So now, can you hear me now?
Yeah, I hear you a little bit. Is your thing plugged in all the way?
Yeah,
I hear you big time now. Yeah. Yeah.
I can relate to Sandy regarding all the taxes and stuff like that. Because I have to pay monthly taxes on my salary. So we have different levels. So if your salary goes up, let's say $2,500 a month, I pay more taxes on my salary. So I try to keep it as low as possible, so I don't have to pay too much taxes, because then I have to pay extra percentage on that my company has to pay to the government regarding the salary that I pay myself. So that's why I try to keep it as low as possible. But then I try to use different methods of just getting the money out of the company.
Yeah.
So,
Okay.
so yeah.
Nope. Go ahead.
So I try to. So when I travel, the company takes care of everything. I do my groceries through the company. So what I can, let's say that I can use for my employees, which are just us, me and my wife. So like coffee and bread and cheese and stuff like that.
But it's still going to be, because everybody's going to have different scenarios and different tax implications and different expenses. So the overall point that we're trying to make is that it all needs to be tracked and recorded, right?
Yeah.
Because the thing about understanding your financial well-being or understanding your financial situation is that it gives you clarity, it gives you direction, and it allows you to make smarter decisions, right? So I think overall, the concept that we want you guys to make sure that you're incorporating into your lives, and in lives means business as well, is that understand what comes in and understand what goes out, and make sure that you pay yourself first.
Yeah,
those are the key components. And I hear you, Helgi. Every country, every person is going to have unique situations that need to be accounted for, right? But what's important is that they are accounted for.
Yeah, we track everything that we have. So
Good.
So the rent that we pay for our facility and yeah, basically everything.
Good. Okay. All right.
So Stacy, with that, that was a great example, right? So with the taxation in your country, there are ways to make sure, Helgi said he keeps his salary or his income low, so he doesn't have to pay high taxes on things like that. There are so many ways to do that, which are completely legal, completely ethical, and really great, but need to be done, right? So Camelia will definitely teach you all of that, and myself, and we will all go through that with you to help you with that, because we want to pay our fair share of taxes, but we don't want to pay more than we have to. Jeff, questions? Something.
I've done it. I mean, I've done it in the past, so it's just a matter of adding it in on a regular basis.
And that's a key point right there. Once you've set up your system, you got to be consistently tracking and reviewing it, right? It should go in as part of your weekly review to update your numbers. And the budget worksheet that we'll share with you has a budget column and an actual column, so that each week you can track exactly where you stand in terms of what comes in and what goes out. But you have to do it, and you have to do it all the time.
I did it when I had my training business, and that's it's now incorporating into everything. So the personal side of things also, and like Gary said, putting away money for vacation account, education account, that type of thing. That's probably what I'm not doing a very good job of right now.
Yeah.
The beautiful part of finance and of Helgi, I'll see you later, buddy. The beautiful part, guys, of finance is that when you have it tracked and you understand what's going on in the machine, it makes it so much easier for you to make a decision. The hardest part, the story behind money and the mindset behind money, is that a lot of people bury their head in the sand when it comes to it because they don't want to deal with it. It's super common, but it keeps you in that anxiety-driven kind of mindset, right? And even if the situation isn't a great situation, it's better to know about that situation than it is to ignore that situation. Because if you know the situation, you can fix the situation. Even if you don't think you can fix that situation, you have two people on this call right now that can help you fix the situation. Because all of us have been in financial, I'm not speaking for the two of you, Sandy and Jeff or Camelia. I've been in financial turmoil and have learned how to get out of it and have learned a lot from different things when it comes to that. But always in relationships and everything, right? Burying your head in the sand does no good for the situation, because the situation is the situation. We don't have to make it any worse than it is. We don't have to make it any better than it is. We just have to deal with that situation.
And to add to that, I will tell you that many times you guys will come to us with questions about, should I do this? I want to do this. Should I do it? And we will answer that question with, well, what do the numbers tell you? Right? Because the numbers allow you to make a decision based on using your head versus using your heart. And so we'll always drive to the numbers to help make the right decisions for growth in your business.
I'm going to give you guys a personal example really quickly. This weekend, Sunday, Jill had a soccer game. My wife's name is Jill, Sandy. Jill had a soccer game, and she came home, and I don't remember what happened prior to there, but I looked up a number for a car that we have, right? And I'm just a little neurotic when it comes to certain things. So I look it up every 6 months to see valuations, right? I love the markets of different things and I love valuations. So I was looking it up and I was like, oh my God, it went down. Like, that's not a cool thing. And Jill came home from the soccer game and I was like, Jilly, car went down, we're selling it. It was like that, right? And she's like, Gary. And I'm like, no. For the past 3 hours since you've been at your soccer game, I did all of this research. I have all this data. Here, look at this. It's telling me. Camille's laughing because she knows that's exactly how I roll, right? So I made all these phone calls, and she came home, and she's like, really? And I'm like, really? And she didn't really like the car anyway, but not a big deal. But I was like, I already called the dealership. What kind of car? First, I was like, what kind of cars do you want? And she's like, well, I don't know. I was like, okay, these are the kind of cars that you would really like. And she's like, okay, we'll do that. So we called the dealership. We ended up going down to the dealership. And long story short, we got rid of her car and got a new car. Now, right before, this is real life, right before we bought the car, and it's kind of a cool thing, and she was super excited, and I looked at her and I said, okay, in our life, right, we make emotional decisions sometimes, right? Or we just have to, excuse my French, Sandy, but I was like, fuck feelings and make a real decision. And I said, Jilly, I don't like buying liabilities, right? I just don't. And she knows that. And I said, this is a liability. So fuck feelings. Is this a good, smart financial decision, right? Because if you're saying yes to this car off emotion, then we're not getting it, right? I knew that it was a smart financial decision because I did all of the numbers, and it was a smart financial decision. Now, that is a real life experience of saying the numbers, right? Logically, you know that you can do this or not do this, but you wouldn't be able to do that if you didn't know your numbers, because you might make a decision that is emotional, right? That's a real life example that just happened on Sunday for me in my life. And that happens oftentimes in my life, right? In all of our lives. But just like Camelia said, a lot of times if we don't know the numbers up here, we make the decision from here. And a lot of the times the decision from here probably financially isn't always the best decision to make. I just wanted to share that with you. Go ahead. Do you have something to say, Daniela? No? Okay. You're on mute. I'll unmute you. What's that? What's that, love?
I said, I'm not going to touch that one with a 10-foot pole. You do know that cars always devalue unless you have a Range Rover or something like that.
Yeah, that's why I said I hate cars, because they're a liability, right? I hate them.
I mean, as soon as you drove the new car off the lot, it already lost in value.
Don't you worry. I understand. I know. I know.
Talk about women.
What's that?
I said they talk about women.
The point is, Gary knew his numbers, and he knew.
Yeah, I got that. Yeah, I mean,
but not only did Gary know the numbers, he also had a financial plan for his future, which will be something we'll talk about as well. Because it's important to know what your financial plan is, so you not only can make the right decisions with your current numbers, but make the right decisions based on what your financial plan is going forward.
Sure.
So always important. Yeah. The bottom line is just know your numbers.
Yeah.
And like every day is Shark Tank. If you guys watch Shark Tank, just pretend every day is Shark Tank and you're sitting in the tank and they are pummeling you with questions about your numbers, because that is the key to business, having a good business.
Mm-hmm.
And it becomes fun, because if you want to go on vacation, right? You know, if you can go on vacation, if you know your numbers, right? In every aspect of life, instead of putting it on a credit card and not knowing if you can pay that off and just rolling the debt over and over, it's so much easier and so much healthier to understand your numbers and run your life like a business.
I think I already do that.
Good. So you're ahead of the game.
I'm always willing to learn, you know. I mean,
honey, girl, you're ahead of the game, right? Because 99.9% of people don't.
Okay. Because, I mean, I know exactly what I have in the bank, and I always pay my credit card off every month if I spend something. So
you're a rock star. Jeff puts $20,000 on his credit card every month.
I don't even own a credit card.
Oh, he puts it on your credit card, Gary.
He puts it on mine.
Okay, now I got it.
That's right. He's driving my Range Rover. Anyway, so that's it, guys. There's more to this that we will talk about. But I would love feedback from you if you do have questions. Because, again, it is important. And it's important, I believe, and I believe Camille believes this as well, is to run your life that way as well. It's a good habit to get into.
I check my numbers from our family perspective every week and from my business perspective every day. Every day.
It's important.
Yeah.
All right, crew. Well, if you have no other questions, we're going to end the call and stop the recording.
Okay.
And